I'm Matt Walker. I'm chair of the IAIS's Policy Development Committee, or PDC as we call it. I'm joined here today by a few of my colleagues. You'll probably see me phoning a friend at various points to ask them to come up. Especially if we get any technical questions, I'll let them introduce themselves as I do this. For those of you that are less familiar with the IAIS, the PDC, or Policy Development Committee, oversees the development and maintenance of the IAIS's principles and standards. And together with the IAC, or Implementation Assessment Committee, we also oversee the development of materials to support IAS members in implementing those standards. I'd like to talk a little bit about what we've been doing and what we have coming up at the PDC today. In particular, I know a lot of you are interested in the ICS, so I'm going to start by talking about some of the development there and what is to come. I have some important news there. Then we're going to go into some of the other finalizations of our standards at this, in particular on recovery and resolution. And finally, I will talk a little bit of our ongoing work on conduct and culture and operational resilience and accounting, some of the other important areas where we have work underway that get sometimes less attention. I will try to keep my opening remarks brief because I'd like to make this as interactive as possible to give you all time to ask whatever questions you may have. But I do want to start first with the ICS, if we could go to this, because this was a major accomplishment for the IAIS. This was a project that was 10 years in the making. I think the ICS will have important implications for us as supervisors to not only help protect policyholders, but also contribute to financial stability and serve as a common language for supervisors as we communicate and cooperate around the world. I'm particularly excited about this common language aspect. My background before I came to my current role is I was at a rating agency, and one of my responsibilities was trying to compare capital across the world to make sure our own capital methodology was appropriately calibrated. And I saw firsthand just how difficult it was to look around the world and compare this stuff. So I'm particularly excited about the ICS as a common language. But if we go to the next slide, it's no surprise to all of you that this was a mammoth project. You see some statistics on the screen now. The ICS was over 10 years in the making. We had field testing, a 5-year monitoring period, 50 companies submitting data every year, 4 public consultations, and more events like this with stakeholder feedback than at least we cared to count. So I do want to thank you sincerely for all of your engagement over the years on this that led up to this milestone. You'll see another important item on the screen. I think we've even bolded that there were over 5 million data points that went into this, making it one of, if not the most tested financial standard prior to adoption. And here's the important news, and I think the thing that many of you from companies will probably be taking away from this session today. The breaking news is that we've decided at the IAIS to not continue to push to 6 million data points. We will. Yeah, you're welcome to applaud at this point. We will be discontinuing the ICS data collection. Now, before you get your hopes too high, we do still need to collect some data. We're going to try to do that through supervisors because part of the ICS methodology, in particular on discounting of reserves, relies on information on the investment portfolios of IAIGs. So we're going to do something more targeted and hopefully aggregated to get that information on investment portfolios. But it's not, the ICS data collection will not continue in its current form. And Ramon and Paolo can correct me if I've, okay, thank you. Additionally, some of the other feedback we've gotten over the years is that you all wanted more transparency into aspects of the ICS. And I'm happy to be able to announce that in addition to publishing the resolution of comments and level 1 and level 2 ICS documents, that we've also published our calibration document explaining where some of those parameters have come from. So I'd encourage you all to take a look at that and let us know if you still have any questions. I hope that will answer many of them. If we could actually just skip the next slide, I'm not going to cover much about the ICS background. I think you all have some familiarity with what the ICS is, but if you have questions on that or the related ICPs on 14 on valuation or 17, I'm happy to take those. But I'm going to go to the next slide and talk about what's still to come on the ICS because, well, this is an important milestone. It's not the end for us. Our next focus really turns to implementation assessments. We have an ambitious project here. It's going to start with developing an implementation assessment methodology over the next year. We hope to have more details available to the public by middle of the year as far as high level what we're going to be doing here. We've already made some decisions. We know it's not going to be a line-by-line exercise. We also know that the work is going to proceed in 2 phases, similar to the successful model we used with the holistic framework, where we first did largely self-assessments through what we call the baseline assessment. We plan to do that work in 2026 and come back in 2027 and do more intensive jurisdictional assessments, or what we call TJAs in the holistic framework context, to look at how jurisdictions have implemented the ICS. I know these timelines are ambitious. But the reason for that is because we've heard from so many stakeholders and our own members that they still have questions about how this is going to be done, and we want to provide as much clarity as we can on the implementation assessment side. So I think that's all I'll say on the ICS at this point. I want to talk a little bit next about some of the other standards that were finalized. Daniel covered at the EXCO Town Hall yesterday some of our work on climate, so I'm going to focus here on recovery and resolution, which were some of the other important changes we made to our standards at this set of meetings. The background on this, as part of the FSB's endorsement of the holistic framework in 2022 and their discontinuance of GSI designations, that work was based in part on the IAIS's implementation assessment of the holistic framework, and the IAIS, as part of that FSB decision, committed to consider the lessons we learned in doing that implementation assessment. And these changes that we just finalized are meant to consider those lessons learned, enhance clarity, and improve our alignment with the FSB's key attributes. One particular change, and I think probably the most impactful change I'd highlight as part of this set of revisions, is on recovery planning. Formerly, the standards only required recovery plans to be in place for internationally active insurance groups, and only where those were deemed necessary by the group-wide supervisor in consultation with the other involved supervisors. What we saw through the implementation assessments was that there was not a great amount of consistency about where that was done, and also it didn't capture the possibility that a resolution plan could be needed outside of the IEIG context, such as if there were a domestically important insurer whose failure could be disruptive. So we made changes that required supervisors to have a process in place to consider the insurer's nature, scale, and complexity on where a resolution plan could be required, and at a minimum to require resolution plans for any insurer that's assessed to be systemically important or critical if it fails. That's all consistent with what we consulted on earlier in the year, but as part of the finalization, we did consider your comments and we did make some important changes in response to them. In particular, one of the areas where we had sought feedback on was proportionality and how this should be applied to smaller insurers. And I can say we've made some targeted adjustments, in particular on resolution planning, to clarify how proportionality would affect smaller insurers and what our expectations are on that. We've also been working closely with the FSB on this relevant work. I think you all, or many of you probably saw the FSB published a list of insurers subject to resolution planning requirements yesterday as part of their resolution report. The FSB will update that list as legislation and regulation evolve, and we will continue to work closely with the FSB on this important area. I'm going to go to the next slide. So Jerry Cross, our DE&I champion, talked a little bit about the work of the IAIS on that, on both governance and market conduct issues. So while the governance working group and market conduct working group have done important work on that, I think that was covered by the town hall. So I'm going to focus on some of the other work we've done on both governance and market conduct. In particular, on governance, I want to highlight some of our work on remuneration. For the IAIS members in the room, you can find some important member-only notes about aspects of remuneration that I think are very helpful. In particular, effective governance over compensation, the balance between fixed and variable compensation, and non-financial measures in variable remuneration. Additionally, in the member-only notes, I want to highlight the work that the market conduct working group has done on conduct indicators. They surveyed members around the table about what conduct indicators they had in their jurisdiction, and they published a members-only note on aspects of this. I can also say we've been working to increase our engagement with consumer groups on these market conduct issues, and I've personally found that very beneficial. Turning to our work on operational resilience on the next slide. The IAIS has done a lot of work on operational resilience over the years, starting in 2016 and 2018, first with an issue paper and then an application paper on some foundational aspects of cyber resilience. We then came back in the 2023 GMAR and did a special topic on cyber insurance, and in particular any connection there with financial stability. We then looked and published a issue paper in the aftermath of the pandemic on a few relevant aspects of operational resilience, in particular cyber resilience, IT third-party outsourcing, and business continuity management, and how supervisors were approaching these issues with consideration of the lessons they learned in the pandemic. Our current project on operational resilience is proceeding in 2 phases. The first phase of this is developing objectives for supervisors on operational resilience. These objectives are principle-based and outcome-based. And for supervisors in this area, we recently closed the consultation on that, so I want to thank all the stakeholders that did submit feedback. The next phase of the project is working to develop a toolkit that will help supervisors achieve these objectives. We hope to publish a consultation on that in the middle of next year. We've decided to hold off on publishing a resolution of comments on the objectives portion of this until we've made further progress and finalize the toolkit portion of this, because there's possibilities we could learn lessons on the toolkit that could affect the objectives themselves. So we do have a draft resolution of comments that was agreed at the committee level at this set of meetings. We don't plan to publish that until we have the toolkit ready. So turning now to the work on accounting and auditing issues, this has clearly been an active area for the IAIS to support our members, particularly on the IFRS 17 implementation. I'd like to save as much time as I can for questions, so I'm going to end it there and just note there's going to be a webinar on this, I think next week on December 11th, that members can tune into if they want additional information on our accounting and auditing work. And with that, I think I can go ahead and open it up for questions. Martin, yes. So it is not an indication of systemic risk. I think there is a note in the FSB publication to that regard. The requirements from an IAS perspective for a resolution plan as opposed to planning are that jurisdictions need to have a process in place that considers insurers and whether they need a resolution plan based on their nature, scale, and complexity. And there's some further factors and guidance that could be considered, and additionally, we would expect the resolution plans to be in place at a minimum for any insurer deemed to be systemically important or critical if it fails. And that sort of assessment was already required under the IAS standards under ICP 24, I believe. So that part is not new. Sure. Feel free to backfill if I miss anything or anything to add. He was asking about where resolution plans are required and what the FSB publication means. I apologize. I could hear the question, though. I will try to repeat if others can't hear. Any other questions? Yes, Peter.
Hi, Matt. Peter Duran from AIA. Given the extensive consultations that went on, there were 2, I believe, with regard to the comparability assessment for the aggregation method, it would seem natural that there would be a similar process for the implementation assessment. But my understanding is that may not be the case. What's the current thinking on that?
So our current plan is to have engagement as we develop the methodology. We do not plan to do a consultation, as we haven't done in the past on other similar issues. We've not generally consulted on our assessment methodologies. But we do plan to engage on these issues, and we look forward to your feedback. We've talked about workshops or regional engagement, but the details are still to be worked out. But we didn't consult on the holistic framework, TJAs, and any other questions? If not, happy to end it early.
I have a questions about how the private sector's insurance company can involve in the course of development of the ICS assessment methodology in the year 2025. Is it purely decided purely consulted within the IAIS member circle, or do you have any contact with us?
So we do not plan to do a consultation. We do plan for some engagement. I think the details of that are still to be worked out. We're happy to share them with you when they are available. I don't know if you have anything.
Just a quick question, Alistair Campbell with the International Forum of Insurance Guarantee Schemes. A number of our members sent friendly notes when you asked for input on the recovery and resolution planning around encouraging the incorporation of IGS into the resolution planning process in jurisdictions where such mechanisms exist. Did anything of that recommendation show up in the final paper?
I do not recall. I don't know if someone closer to that particular comment could. I think we did publish a resolution of comments along with the finalization, but I don't recall that one.
Yes, so that was a question indeed around whether the ICPs or the COM frame itself should refer to the role of a policyholder protection scheme in resolution plans and resolution planning. So that is not covered in the ICPs and COM frame itself. But the IAIS had already developed an issues paper on this topic, and also in our supporting materials. So I think it was on one of the slides that Matt had also prepared. On one of the supporting materials, we will update them next year, and those already describe also the roles of different organizations. So the role of the insurer, the role of the resolution authority, the role of the supervisor, but also the role of policyholder protection schemes, if they exist. And how they can contribute to both the planning process and also the resolution process itself. So that's something that in a bit more detail we can look at when we update the application paper next year, but it's not covered like in the standards itself because it's not something that is required in each and every jurisdiction.
Ian Marshall, Prudential PLC. Just another question on the assessment methodology. Will the assessment methodology cover, and I'm not sure whether this has been decided or not, but is the ICS meant to be a minimum level, you know, or so will, for example, it be the assessment methodology include if you are above a certain level, does that, you know, is it, I mean, in European talk, you know, there used to be like minimum harmonization, maximum harmonization. Is it meant to set a bar, a minimum bar, and then you can do things above that? Or will that kind of detail be included in the assessment methodology, or is that a principle that's already been sort of decided?
That principle has already been decided. ICS is not maximally harmonizing, to use the European terminology. Members are free to deviate upwards. The ICS is a minimum global standard.
Having said that, if you go back to the public communication which was made by the IAIS in June, you'll find there that effectively the implementation assessment will not be a line-by-line assessment. But we said that, but having said that, if you look at that public communication, it also says that we'll have to determine the level of granularity of the implementation assessment and the level at which offsets are considered as well. So I think this is a part of the discussion we still need to happen at the IAS level.
That is the key discussion we expect to take place over the next year. We know it's not going to be line by line. That's already decided, but exactly at what level we do the assessment is still a decision to be made, as well as how much is quantitative. The ICS is the quantitative component of ComFrame, so there's a desire by members to do what we can on the quantitative, but data is always tricky, so I'm not sure how far we're going to be able to go. those discussions are still to be had. We hope to have some clarity on these issues by the middle of the year with a high-level statement, and then have everything finalized by the end of the year. But I do recognize that all these timelines are ambitious. Yes, Akram.
Has there been discussion about with the IMF and World Bank in regards to how the ICS will be assessed as part of FSAPs in light of the fact that the IAIS has now moved closer to doing its own targeted jurisdictional assessments, at least in 2027, based on your timeline? If countries have FSAPs prior to that, has there been discussion about how the IMF might approach that?
The IMF is a member of the PDC. I don't want to speak for them on this issue, but those discussions are underway. I think they are figuring out some of these issues just as we are. Yeah, Peter?
Thanks. I mean, understandably, this meeting and over the last couple of years, the focus in the IAIS, at least in my view as an outsider stakeholder, has been on financial supervisory issues, particularly, of course, now ICS development.
Oh, Peter, would you mind using the mic and repeating so far?
Thanks. So Peter Kotzemer, I'm a consumer stakeholder in the U.S. and a law professor. So understandably, over the last year, the work has been several years, particularly at this meeting, focused on the development and now the adoption of the ICS and, of course, and similar issues. But for a long time, the IAIS has hoped pre-pandemic to really focus and move to also conduct of business issues, especially treatment of consumers is, of course, almost the definition, but also issues such as further evaluating and providing standards on claim handling, which, at least in the United States, and I assume it's similar, is where the vast number, maybe 90% in some areas, of consumer complaints come from, is how their claim was handled, particularly in PC. How do you see implementing that or moving toward more work and producing more standards and more engagement on conduct of business issues?
The conduct issues are very important. So as part of this adoption of the strategic plan, we've decided we're going to take a look at our processes to figure out how we can embed consumer interests more into the IAIS's decisions. I expect that project will take place over the next year plus. We'll have initially some discussions at the Strategic Planning and Financial Outlook Task Force on that, as well as the Market Conduct Working Group. The Market Conduct Working Group is conducting important work on conduct issues, particularly on the DEI aspects now and fair treatment of vulnerable customers. So that work is ongoing. I don't know if Lauren or anyone else would like to add anything on our Market Conduct Working Group. Okay. I think I've covered it then. Yes.
Leanne Jackson here, the Ombudsman Council in South Africa. Picking up on the conduct question, I was actually going to ask a similar question around the focus on conduct, although you did indicate a few work programs. Specifically, the remuneration work that you're planning, is that, given that it's the governance working group, am I to assume it's only really about management and executive compensation, internal compensation, or is there any intention to do some work on, for example, intermediary incentives and remuneration?
So I think as I'm thinking more about it, we do have one other market conduct issue I think we're going to come back to look at how consumer interests are incorporated into our standards. As far as the remuneration work, I think that is about executive compensation.
Maybe.
Yes, thank you. Another one of my phone of friends, yes.
Hi. So just to confirm that what Matt has said is correct, that work that he referenced on the slide did look at executive compensation, but certainly we do recognise the relevance of incentive structures more broadly through the distribution of insurance, and within the Market Conduct Working Group, that's a topic that we have occasionally discussed and exchanged on amongst supervisors. It's not presently the focus of a current project, but it's relevant and we know that to be the case.
think we probably have time for one more question. I think we're running.
Thank you. Olaf Jones from Insurance Europe. And apologies if you made that clear, but I wasn't quite clear on how the data gathering will continue for the ICS. You said the standard process will stop, but you will gather some. But did you indicate that would be via the supervisors rather than directly to companies? And also, if you can just reiterate, you said there was a number of reports or information that we published in the pursuit of transparency, and if you could just repeat those, please.
So first on the data collection, I was probably intentionally unclear there because we're still working out some of the details. I know we need some details on the IAIG's investment portfolios to support the discounting methodology and support our members in implementing the ICS. And that way, we hope we can do aggregated jurisdictional level collections on that, similar to what we do within the GME on the global monitoring exercise as part of the sector-wide portion of that. That sort of aggregation may not be possible in all jurisdictions, in particular if you only had a small number of IAIGs, so we may need to work out something separate for them. There could be a limited data collection there, but some of these, the finer points on the details on this are still to be worked out over the coming months.
Just to give you an idea, Olaf, you know that, for example, for the general bucket, we need to produce, if we want to continue producing yield curves for benchmarking for supervisor, we need some information with respect to the weights that are used for the reference portfolio. So effectively, we're talking about this type of information. So this type of information can be easily accessible by supervisor without bothering firms. Or in some cases, we need to find a way, for example, if in a jurisdiction there is only one IAIG, how to get the consent of the firm so that this information can be transmitted to that, so in order to ensure anonymity. So I think these are the type of information we are talking about, so not going back to, where possible, not going back to firms unless we have to ask for some consent.
Given you're from Insurance Europe, I think I'm pretty safe to say that AOPA is probably already collecting much of this data that they would be needing, but you can talk to Petra about that. I think we're now out of time. Thank you all for joining. I appreciate the engagement.